Hello friends, today let's decode the story of BEML, a heavy engineering powerhouse that builds everything from mining equipment to defense vehicles and metro coaches. Their numbers tell an interesting tale of steady improvement with some hidden surprises. 10 years ago, BML reported 2,904 crores in sales. Now, they are at 4,022 crores, just 4% annual growth over the decade. But the pattern isn't smooth. There were dips, including a sharp 13% drop in 2020, followed by strong recoveries of 19% in 2021 and 21% in 2022. The most recent years saw flat growth at minus 0.8%, showing how project-heavy businesses can be lumpy. Expenses grew from 2,773 crores to 3,516 crores over 10 years. Material cost is consistently 50 to 58% of sales. Manufacturing cost rose from 4% to 7% recently, reflecting more complex projects and technology upgrades. Employee cost dropped from 25% to 21%, a hidden gem showing improved workforce efficiency. Other costs stayed tight at 8 to 12%, demonstrating good operational control despite project variations. The cost structure shows BEML learned to do more with less, especially on the people side. Operating profit climbed impressively from 131 crores to 507 crores. Operating profit margin jumped from just 5% a decade ago to 13% now, more than doubling. This shows BEML's management focused hard on efficiency, squeezing better returns from each project. Other income provides steady support, around 32 crores recently. Interest costs are minimal, 55 crores, since debt to equity is practically zero at 0.08. Depreciation rose with expansion to 74 crores. Net profit surged from just 6 crores to 299 crores, a spectacular 48% compound annual growth rate over 10 years. The journey wasn't smooth. Profits dipped during tough years, but exploded after 2020. EPS rocketed from 1.47 rupees to 71.85 rupees, nearly 50 times growth. The 3-year profit CAGR is 31%, showing accelerating momentum as defense orders and infrastructure projects picked up. Return on equity is strong at 10.5%, good for a capital-intensive manufacturer. Return on capital employed is excellent at 15.6%, among the best for heavy engineering companies. Dividend yield is 0.48%, modest but growing. PE ratio is high at 61. The market expects big things ahead. So, BEML is a classic cyclical improver, lumpy sales growth due to project nature, but steadily rising margins and exploding profits as efficiency kicked in. The hidden gem is how they transformed from a low margin, barely profitable PSU into a high margin, cash generating machine. Overall, BEML's story is about operational transformation. They kept sales growing modestly, but dramatically improved how much profit they extract from each rupee of revenue. With defense modernization, infrastructure push, and mining expansion ahead, BEML has positioned itself to capitalize on multiple growth engines. If this helped decode BEML's transformation, subscribe to Wealth Growth Club and tell us which infrastructure or defense stock you want analyzed next.